Okay, so good morning, everyone. Uh, Welcome back. This is what we are doing through understanding basics of accounting. We've gone through basic concept of accounting. Today, we'll study about the concept of cash and accrual accounting. All of you know about what is cash and accrual accounting and how that is dealt with, right? We'll go through this concept today. Let us, without wasting our time, let us go ahead and start learning about concept of cash and accrual accounting. So, topic one. Now, in previous lesson, we learned about the basic concept of accounting, the system for recording business transactions, about books of accounts and final accounts. Now, financial transactions are recorded under two methods of accounting, namely cash method and the accrual method, which are at variance with one another in their final output. This lesson deals with the feature of these methods, the relative advantage of each, and their limitations. The better you understand a prospective borrower's financial statements, the more prepared you will be to make sound underwriting and credit decisions. At the end of this lesson, you should be able to explain the concept of cash and accrual accounting, identify the limitations of cash and accrual accounting, apply your knowledge of cash and accrual system of accounting when compiling financial statements for SMEs. It's basically we are going to study the two system accountings which exist, two methods, cash and accrual methods. So just let us go ahead. I don't think anything is there to explain in this, right? It's just a basic introduction. Here we go. It is topic two. So as a lender, it is imperative. Just hold on a sec. Yeah. So as a lender, it is imperative to understand the prospective borrower's financial performance. Based on the accounting method adopted, an altogether different picture of business's financial position will be shown. So both these methods give different results. To understand and appreciate this difference and its effect on lending process, it is essential to have a conceptual understanding of these methods. So cash accounting method and accrual accounting method. So these two methods, you need to understand these two methods conceptually. Now these are there. These things we will study from next one. So there are two methods, cash accounting method and accrual accounting method. Let us go to topic 2.A. We'll just study about these two accounting methods in this. You've already done these things. People who have commerce background, they might have already studied this in your 11th standard book. So cash accounting now. Cash accounting is a method of recording transactions only when the cash actually changes hands and not when the transactions occur. For instance, using this method, sales are recorded only when cash is received. So there is no provision of sundry debtors, and expenses are recorded only when they are paid. There is no sundry creditor concept in cash accounting. Benefits of cash accounting: it provides an accurate picture of the current cash position of the business. So it mainly deals with the transaction of cash, the inflow and outflow of cash. It is dependent on the um, inflow and outflow of cash rather than anything, and rather than the timing of the transaction. So, according to cash method, the revenue will be realized only when the cash is received. It is not done when the ownership is transferred or when the title is transferred. It provides a cash flow based system of accounting of profit and loss, which can provide better insight compared to accrual accounting as to whether a company can repay principal and make payments when due. So it helps us to understand the cash flows. So it will make us to understand whether the company will be able to repay back the principal and interest on time. They should have enough cash. Means shortcomings of cash accounting: it overlooks future cash flows arising from transactions conducted in previous periods. So, if anything for which there is no cash received, there may be some debtors which where you are expecting your some part of your sales to be collected in the future, that will be overlooked and that will not be considered. It hides any obligations to pay other parties, as in the case of trade payables or trade creditors and other payables. As I told you, there are no trade creditors, so that this ignores any future payables also. It doesn't show accounts owed by other parties to the business, as in the case of trade receivables or trade debtors. Again, trade debtors are also excluded. It does not show all transaction of a particular accounting period other than those settled during that period, and therefore does not reflect the true position of the business. It doesn't reflect true position. Why? Because it ignores certain transactions which happened during that period, right? So we cannot. There has to be transparency, right? There has to be a disclosure principle is there, where you have to disclose each and every transaction which happened during a period of time. But in cash accounting system, you are ignoring everything which doesn't give cash, right? For example, there may be some future cash flows which you're expecting or future outflows which you're expecting, right? So that they are ignored. So these are the shortcomings of a cash accounting system. Now let us go to B. Now cash accounting system is done. Now accrual accounting system. The other method followed by businesses to maintain their books of account is accrual accounting. Limited companies are required to maintain their books of accounts on accrual basis as per section 128 of the Companies Act 2013. Very important. In case of other type of businesses, the accrual method of accounting stipulated by Accounting Standard 1 AS1, right? So accrual is a method of recording transaction at the time they occur, regardless of whether cash has changed hands or not. So as soon as the transaction happens, that is to be recorded in books of account, there may or may not be cash flow. Transactions are recorded in the following manner. Assets are recorded in the company's balance sheet and they are acquired. When they are acquired, amounts owed to other parties are recorded in the balance sheet of the business when the obligations are incurred. Revenues and expenses are recorded in the company's income statement or profit and loss account as they happen, regardless of cash from sales is received or expenses are paid. Right. So here what we do is, for example, if you sell your goods on credit to some debtor, right, some of your customers, then that won't be recorded in cash, in yes, cash basis of accounting. But in case of credit basis or accrual basis of accounting, that will be recorded as soon as the transaction happens, right? Now, benefits of accrual accounting records both cash and non-cash component of the transaction. It gives more complete view of the financial status of the business that does accounting, cash accounting, particularly with regard to asset ownership, amounts to be received and amounts owed by the company. Shortcomings: the cash flow of the business may be considerably different from what is implied by its recorded accrual financial transaction. In other words, the amount of cash flowing through the business could be far larger or smaller than what the accrual accounts may suggest. So it doesn't show the cash flow status of the firm. Because the accrual method allows for flexibility in the way items are presented, financial statements may not directly comparable between businesses, because there may be various standards which are followed by different companies, right? So they may not be comparable to each other. So these are the this is about the accrual accounting. Now, these are some case studies what will happen. Right. So in cash transaction, in cash basis, it will be like you are not recording unless and until cash flow takes place, and in accrual accounting, you record it as soon as the transaction happens. The following example will be helpful to understand the effect of each accounting method on financial statements. On January 1, 2017, Raj Sales Corporation, a firm dealing in building materials worth rupees 10 lakhs. The payment will be made on the later date. This transaction is called as credit purchase. On 1st of January 2017, Raj Sales Corporation made a sales of rupees 15 lakhs. The payment for sale will be received later. This transaction is called as credit sales. Under the cash accounting method, on January 1, 2017, no accounting entries are recorded in Raj Sales Corporation books of accounts, as no cash has been paid in case of transaction number one, and no cash has been received in case of transaction number two. That means there is no recognition of the asset or the liability. Presuming that there is no further transaction in January 2017, if the profit and loss account and the balance sheet are prepared on 31st of January 2017, month end, they will not show any entry under the cash accounting system, but in accrual accounting system, it will show as debtors and creditors, that debtors and creditors have been received like this. Right. So there will be debtors and creditors in case of accrual accounting system, but there will not be any debtor or creditor in case of cash accounting system. So this is done. Now this is the difference. What is the difference between cost accounting, cash accounting, and accrual accounting? We already discussed this, right? This is more cash focused. This is more focused when the transaction happens, right? So I don't think there's need to understand this. Just go through this. It is just a repetition of whatever we've studied. Okay. Now, applying the cash and accrual method to financial statements. Now, cash method is mostly suited and generally adopted by small businesses or SMEs having low business turnover. Also adopted by professionals such as lawyers and doctors who deal in cash, where business customs do not allow for the purchase or sale of goods on credit. This method is mostly suitable. So cash method is not widely used. It is mainly used by small businesses, professionals, and where there is no custom of credit sales and credit purchase. But accrual accounting, it is used by most commercial and industrial enterprises, as it reflects the complete financial position of the business. Companies Act also mandates. So this is very important. Maintenance of companies' books of accounts on an accrual basis. Firms that are subject to tax audits are mandatorily required to prepare their account on accrual basis. So tax authorities also require your account to be made in accrual basis. The revenue recognition concept clearly states that the income and expenditure should be recognized as and when transaction takes place, irrespective of cash movement. This is called as a matching principle. Bankers base credit decisions on the financial results arrived at by applying accrual method of accounting because it gives you proper disclosure. That is why bankers rely more on accrual accounting. Then peer comparatives are typically based on accrual financial statements. So you can compare one company with another using accrual accounting system. So this is more widely used method, accrual method, and cash method is not that widely used. It is used by small businesses only. Now, you need to quickly review the financial statements. If there is any question as to bring accounting method used, ask company managers which method they have employed. If there appears to be element of both cash and accrual accounting, make a thorough inquiry as to the company's accounting methods and process. This step is especially important if the account have been internally prepared and have not been audited by the external accountants. Lastly, be mindful of the benefits and limitations of each method as you begin your analysis of borrower's financial performance. So these are the things which you have to do as a credit manager. not that important. Now let us. This is a small case study, right? So in a branch, when you are faced with the making a credit decision on the basis of financial position of a customer, the knowledge gained in this section will help you to understand the financial position of the customer is reflected in their financial statements with respect to adoption of accounting methods, cash or accrual. Understanding the implication of liabilities not captured under the cash method of accounting. Understanding the relative relationship, the net profit or under the accrual method to the actual generation of cash, which plays a significant role in making a lending decision. It is also useful to prepare financial statements of small businesses based on limited information available with both methods, which the following example explains in detail. So, Mr. Ramesh, a small scale grocer, applies for a loan to improve their business. Being a small scale businessman, he has not maintained proper books of account. You tell him that in order to consider his loan application, it is essential for the bank to know the financial position of the business. Mr. Mahesh brings some information to you, which you arrive at some key figures. So these are some figures he has given to you. Mr. Ramesh informs you that information provided is based on the transactions for which cash has been received. He adds that he has also made sales on credit as well as purchased goods on credit, and those transactions have not been included here. After gathering the complete information, restated figures are this. So these are accrual accounting and cash accounting. So two different things have been mentioned by him. As you can see, financial statements of businesses are very different depending upon the transactions are accounted for using cash method or accrual method of accounting. If you are contemplating lending money to this company, you would prefer accrual method because it gives you much clearer picture of ongoing financial products and prospects and position that does cash accounting. Why? Because it includes these creditors and debtors and all those things, right? It is important to disclose everything. You cannot just believe in cash accounting, right? So this is there. We've done this. Now, this we already know what you have to do. Are the financial statements prepared under the cash method or accrual method of accounting? What accounting entries should entries support the conclusion? And if the statements are cash based, do you have access to sources accounting information that provide a broader financial picture? Which method provides a better insight for arriving at credit decisions, cash or accrual? So, of course, accrual system is more acceptable statutorily and also conceptually. It is more. It gives you clearer picture, right? So, with this, we come to knowledge check, and that is end of this particular topic. So, just to brief about the summary of this chapter, it is comparative study of cash accounting system and accrual accounting system. Cash accounting system is mainly used by small firms, professionals, but accrual accounting system is largely used by larger, bigger enterprises, and it is also statutorily acceptable as per Companies Act 2013. Accrual accounting system considers the transaction whenever it happens, rather there may be inflow or outflow of cash or not, right? So, but in the cash accounting system, you ignore a transaction if that doesn't result in cash inflow or outflow, right? So, the biggest example is credit sales and credit purchase, right? So, thank you, and I hope you all enjoyed this session. It was a short session, but it was useful. Thank you.